All right, we're back with you, and we're keeping tabs on your ag commodity trade today. I'm Marlon Bowling with you. We had the weekly export sales numbers that came out this morning, and we can take a review of those if you'd like, if you missed them this morning. Corn sales last week cleared 1 million tons, 1.02 million last week. Soybeans not too far from 1 million. They were at 902,200. The wheat, 334,100 tons last week. Interesting movement here in the grains. Things have been chopping around, but now we have kind of turned higher. Let's go to the corn board. Our quotes are provided by Bar Chart, and July corn is now trading 6.5 higher at 788. Now December is hanging around unchanged, so not much going on with that month. Meanwhile, in soybeans, July now 28.5 higher at 1691.25. That's within 2.5 cents of our high of the day. If you look at the November new crop month, we're 14.25 higher. Check that, now 13.5 higher. Now on to the wheat we go, and we're past day 2 now on the Wheat Quality Council tour. They're going to be heading to Manhattan here in a little bit and then announcing the final tour results at midday. So July Chicago wheat is 20 lower at 12.10 3/4, but it is off of its earlier low of the day by about 17 cents. On the Kansas City board, we have the July contract 19 3/4 lower at 13.04 3/4. Minneapolis spring wheat, July currently at 13.38.5, and that's down 14.25 cents. A lot of bearishness this week once we got past that limit up day on Monday. And here to talk about it, let's welcome aboard Ted Seifried of Zaner Ag Hedge in Chicago. A lot of downward pressure on the wheat. Is it justified, do you think?
Well, when you're up at these high price levels, volatility is going to be a thing. So, I guess the real question, Marlon, is, are the prices that we're at justified in wheat? And I'm going to say they're a lot more justified now than when we originally got up here in the July contract right after the Russian invasion of Ukraine. Now you have a whole lot more going on. You have production issues going on in multiple places, almost everywhere, really. This thing with Russia and Ukraine has really dragged out and gone a lot further than what we were originally thinking. I think a lot of us thought it was just going to be a quick Russian victory, I suppose, but that really wasn't the case. Quite the opposite, actually. So now you have the UN talking to Russia about reopening those grain ports in the Ukraine in exchange for reopening the Russian potash market. But you really wonder if there's anybody there to work the ports, how much damage has been done to the ports. Is that something that can happen in the near term? So ultimately, I think grain will refind its mojo. But in the meantime, yes, it's going to be a very turbulent week. And we've got a lot of macroeconomic things going on right now, Marlon, and that on specific days, especially yesterday, has been the bigger gorilla in the room. So we have to have our heads on a swivel right now. I mean, this is just things coming fast and furious, really from every direction.
So, for example, on the outside markets, we have the Dow Jones Industrial Average right now. If we take a look at that, of course, yesterday it was way over 1,000 points lower. Well, today they're adding another 388 points to the downside on the June futures. So we're at 31,052 right now. The dollar index, what is it doing today? Wow, it is dropping big time. We're down 862 points on the June U.S. dollar index futures. We're at exactly 103 even. So that could be a factor in our ag trade moving forward if that dollar gets weaker. Crude oil down $1.05. We have West Texas June now at 108.54 off of its earlier high from last night by nearly $2.50 now, but it had been as low as 105.13 too. We'll take a break here and we'll talk more with Ted Seifried about the developments in our livestock trade ahead of the cattle on feed report coming out tomorrow. We'll discuss when we come back. We're talking with Ted Seifried of Zaner Ag Hedge in Chicago. Before we get into this livestock trade, you were wanting to touch on this soybean trade too that has kind of surged ahead while corn is dragging its feet. What's going on with that?
Yeah, I'll make it quick. Look at the old crop soybean sales, really very strong at a time of year where we don't do these things. And that is really what's happening. Cash market has been really tight. Even with the drop yesterday, basis was improving. We know that there's not a whole lot out there for both corn and old crop soybeans. But those old crop soybean sales are unsustainable, hence why soybeans are trying to lead the way higher across the board. Also, don't sleep on those meal sales. We had meal demand kind of drop off because of bird flu, but we haven't really heard much about bird flu in the last 3 or 4 weeks. That soybean meal demand is coming back in a big way. Last month's crush was slow, as it normally is, because of seasonality. But meal stocks aren't all that great, and we're exporting a lot right now. So a lot of reasons for old crop soybeans to continue to regain this mojo based on this tight stock scenario that we've known about for quite some time. And in the meantime, big drop in the stock market yesterday. The Fed is trying to talk themselves out of inflation. And to this point, the markets seem to be kind of letting them do that. I don't think it's going to be that easy for the Fed. I don't think they can really aggressively raise rates in the climate where this stock market is really under as much pressure as they have, because it's really the no-no word, the stagflation word. That's what they're really that's what they're staring down the gun of, and that is the absolute thing that they can't let happen. So this is going to be an interesting thing on inflation and what the Fed's going to do from here.
Yeah, it has been a precipitous drop here this week. Well, let's see if that's having any impact here on the live cattle board. It is showing a few plus signs today. We are higher by just a little bit. The June up just 7 cents. August 17 cents higher at 131.87. A lot of nervousness out there about what retail demand will be in the future here. August feeders now trading 70 lower at 165.10. And if you look at the lean hog market, well, the lean hogs were doing some backing and filling today. We had July down $1.05 at 107.47. In about 10 seconds here or so, lean hogs, are they going to find support here anywhere close or not?
Halfway decent export sales, but you see in the hogs and in the feeders, we're worried about what's going to happen over time because of the drop in the stock market. We're worrying what that's going to do to demand, especially when you look out into the October and beyond months. So yeah, 10 seconds, we're worried about demand because of what's going on in the stock market. I think that'll get better. I think demand's going to be hot and heavy for the first half of the summer as we get really into the heart of the grilling season.
That's the key right there, grilling season, and I'm right there already. So, all right, well, thanks for bringing that up, Ted. That's a great point. Ted Seifried of Zaner Ag Hedge with us here today. Suzanne, back to you.